Hey everyone, Dan here. It is Wednesday, March 10th after the closing bell. As you can see, there's still after hours price action happening. This is the 5-minute chart on AMC, so we're going to start by looking at that. Before I get into it, if you enjoy these videos, please like and subscribe. It helps a ton. And let's get right to it. So AMC, as I've been saying for a week and a half, its most important level to build support off of as a springboard is 911. That happened yesterday. As we see here, it had that strong support that it built in the, I guess this is the pre-market, like right when that opened, jumped off and then got through additional levels of support and then used that as springboards to our higher levels of support. So that brought us into today. During the pre-market today, I had identified this green zone and basically said, here's, I was charting this when this fall was happening. I said, we're really going to want AMC to push through this green box because we had seen a lot of topping out happening in the after hours and pre-market at that zone. And it did it, but it had a hard time holding that 1191 support. It didn't really ever establish support there. It fell through pretty quickly. And then, with the downward pressure, it couldn't even hold 1152 and ultimately got pushed down quite a bit. I think this is like when that broader market sell-off was happening. So I think that was a contributing factor here. Good thing is that it didn't push itself down through these levels of support, which it had worked so hard to establish in the last week or 10 days. So that's what I've sort of continue to say is that when there's these strong levels of resistance and a stock is really struggling, once it does get over that level of resistance and establishes that as support, that support level is equally as strong as it was when it was a resistance level. So, AMC kind of blowing through these levels and then falling back through them equally as easily, that's to be expected. So this sort of crazy run-up often results in an equally crazy sell-off. And so don't be surprised when you see those things happen. What would have been, in my opinion, catastrophic for AMC, and what still would be catastrophic for AMC, is if it fell through these levels of support and couldn't hold 911. To me, that would say that there's something fundamentally wrong with the chart. Not the chart that's been drawn, but in its ability to hold the chart. And I think that it would have a broader sell-off at that point. So that's what I'm looking for from AMC. I do think overall the last couple of days have been strong, even though it ended today red. But I'm not concerned about it at the moment, to be honest. I think it's building itself a nice cushion of support, much like we've been talking about with GameStop. And I'll be looking for sort of support in these yellow zones as we proceed through Thursday and Friday of this week. NNDM has earnings coming pre-market tomorrow. And I took a position today, actually. I got back into NNDM in sort of anticipation of what earnings might do. My theory on why taking a position made sense today, and I didn't risk a ton of money, so if it's wrong, it's wrong, was that it's gone through this horrendous sell-off where it went down almost to a third of the price that it had been just less than, or I guess just about a month ago. So chop the price into thirds in the course of a month. I mean, that is pretty aggressive. And so my thought was, even if earnings don't blow the lid off, if there's any sort of positive guidance, or if it is sort of in line with what people were looking for or expecting, then, it's already taken such a beat down that might still be enough of a catalyst to push the price action upward. I'm really keen on getting to this 1249 zone. I would feel better taking a stronger position at this 1093 even, but I'll really be looking for that 1249 to see what's the reality of NNDM getting back up to these levels that approach 20, or was that just sort of a fluke, an anomaly in the price action, and it'll have a hard time returning to that level anytime soon. So that's what I'm looking for. Otherwise, it held up relatively well today. given that it was a red day. It kept getting underneath support zones, but then able to get back up on top of this 928. So I'm going to take that as hopefully a progressive and good sign, and that gives us some optimism that it can get on this 950 level and regain that as support, and then do some launching tomorrow after earnings are reported. We'll see. Earnings are always a crapshoot. Sometimes there's great earnings and it's still a sell-off, but that often happens when there is a huge run up in anticipation of great earnings. Then even if the earnings are great, people are like, whoa, we've way overextended this stock. I'm still going to sell and take my profit. So I'm hoping the opposite is going to happen with NNDM. Sorry if you keep hearing things. I keep bumping the table. I'm at a different table today. So I also re-entered a position in eyes today. So eyes went through this beatdown, and then, I was catching this run up here. And then, not surprisingly, it's bumped up toward our 1293 level and got pushed back down, which is currently what it's struggling with right now. I haven't drawn in any zones below that still because for not really any particular reason at all. I kind of think that we're going to get past this 1293 zone and push up toward that 1437 again. So that's why I haven't drawn in anything underneath 1293 yet, even though the price action was there basically all day today. But, we'll see what it brings in the coming days. And I can fill in some zones there if it seems like it's not going to come back to 1293 anytime soon. But there's still a lot of volume in the stock, still a lot of good activity. So we'll just have to sort of see, what each price brings us when we get there. And then IPOE. So we had put out a video on this one a couple of days ago, sort of talking about the run-up that, we may expect before it merges with SoFi. And it actually had, relatively speaking, a very good day today. So it was finally able to get over this 1801, which that was like my money zone, as I was talking about, where I would really look for it to push off of that strongly and really start to make great gains. That's finally what we saw. It actually was established a support level at, like 806, 805. And so it didn't even have to kind of reach down to the 801. I was a little concerned when it was sort of like topping out here and then topping out here again. But that 1801 sort of provided enough liftoff that it pushed us up to our next zone, 1919. And so I'm hoping that sort of leads us closer to 20. And that's what I'd be looking for there. So you see my green money box here, my 1801 money zone. And so right now we are in good shape since we are through that. So now it'll be just maintaining this zone. Be the next thing I'll be looking for. And then let's finish it off with Carnival Cruise Lines, CCL. We had put out a video on this also maybe on Sunday or Monday or something like that. I didn't grab CCL in this buy zone that I had identified because I was preoccupied with other things, but it's come back down into that zone now. So I'm thinking tomorrow I may look to see what's happening and get into a position. I think it's, it has some promise as a recovery play. It's been a long time coming. It's still one of the more beaten down stocks because of the struggles that they've had with the pandemic and being able to operate. But yeah, in my opinion, 26.52 would be a great place to buy this up. That's what I'm going to be looking for. If it shows some strength in the pre-market and it's in this green box, I may choose to say, this is still within an acceptable risk to reward range, and I'm going to jump in now and sort of ride the price action and see what happens. So that's where I see things with CCL, and that'll do it for this video. Good luck to everyone. I hope everyone is having a good week so far, and I'll see you all in the next video.